Just when it seemed like the crypto market had settled, a storm hit, sending Bitcoin plunging by over $10,000 in just 24 hours. The market was shaken, and fear gripped investors worldwide. But amidst the chaos, there has been a fierce battle between panic sellers and opportunistic whales, with global economic shifts, rattling markets, and surprising resilience shown by the crypto community. Stay tuned as we dive into what caused this crash, the wild price swings, how the big players are reacting, and what it all means for the future of your investments. Welcome back to ChainMind, your trusted source for deep insights into the world of cryptocurrencies. Today, we're dissecting one of the most volatile weeks in crypto history. What caused Bitcoin to crash, the aftermath, and the silver linings that could pave the way for a stronger market ahead. Let's jump right in. Last week on Sunday, August 4th, Bitcoin was trading at a strong $61,000. However, within the next 24 hours, we witnessed one of the most dramatic crashes in recent history. Bitcoin's price plummeted by over $10,000, bottoming out at $49,000. This sharp and unexpected decline left the market reeling and triggered widespread panic among investors. So what exactly led to such a drastic fall? It all started with growing fears of a US recession combined with an unexpected interest rate hike by Japan's central bank. These economic concerns sent shockwaves across global markets. The Dow Jones Industrial Average fell by more than 1,000 points, marking a significant downturn. Meanwhile, Japan's stock market experienced its worst drop in 37 years, and the ripples were felt strongly in the cryptocurrency market. Bitcoin fell 15% within just 24 hours, while Ethereum faced an even steeper decline, dropping 22%. The reason crypto took such a massive hit can be traced to its increasing connection with traditional financial markets. As more institutional investors enter the crypto space, particularly through Bitcoin ETFs, cryptocurrencies are becoming more intertwined with other asset classes. When global markets panic, the effects are now felt in the crypto world too, driving down prices as investors seek safer assets. On August 5th, the cryptocurrency market's losses mirrored extreme sell-offs across the global equity market, causing over $1 billion in liquidations. The crypto market was on track to deliver its worst daily performance since the collapse of the FTX crypto exchange in November 2022. The market capitalization of all crypto assets combined plunged by up to 15.8%, hitting a 6-month low of $1.694 trillion. At the core of these declines is the reducing appeal of the yen-dollar carry trades. Typically, in a carry trade, traders borrow funds in a low-interest currency like the yen, exchange them for a high-interest currency like the US dollar, and use the proceeds to buy stocks, bonds, and other assets. This strategy has been profitable due to Japan's near-zero rate policy compared to the US's higher rates. However, on July 31st, the Bank of Japan increased its interest rate to 0.25%, raising speculation of further hikes. In contrast, the US Federal Reserve is likely to start cutting interest rates in September due to rising unemployment and slower economic growth. As a result, the yen surged to its best levels against the dollar since January 2024. This rapid appreciation has disrupted the profitability of the carry trade from yen to dollar. Traders who borrowed yen to invest in riskier assets are now closing these positions to avoid higher borrowing costs and repay debts. The result is a rout in the stock and crypto markets, with geopolitical tensions in the Middle East and recessionary risks in the US adding to the sell pressure. The crypto market decline picked up momentum due to $1.08 billion of liquidations in just 24 hours, with $919.54 million of those being long positions. The significant liquidation of long positions suggests that many traders were overly bullish and heavily leveraged. When the market moves against these positions, it triggers a cascade of liquidations, exacerbating the downward price movement. This scenario often leads to a rapid decline as stop losses and margin calls are hit. Meanwhile, the drop in open interest in the crypto futures market by approximately 15% signals a decrease in the number of active futures contracts, indicating that traders are closing their positions and stepping back from the market. Funding rates of most top coins, including Bitcoin and Solana, dipped into negative territory simultaneously. Amidst all this turmoil, other factors contributed to the conflagration. Geopolitical tensions, such as a G7 statement suggesting Iran could attack Israel within hours, added to the market's anxiety. Additionally, in the crypto space, jump trading, an institutional market maker, has been selling Ethereum in large quantities and in an unprofessional manner, fueling rumors that they might be pulling out of the crypto market making business. On the political front, the momentum that once supported Trump has shifted towards Kamala Harris, with the gap closing on prediction markets like Polymarket. Despite the panic, when Bitcoin hit $49,000 and Ethereum dropped to approximately $2,100, prices that were last seen in February 2024, Bitcoin whales were panic buying while smaller holders were panic selling. Data from Into the Block shows that Bitcoin wallets holding between 1,000 and 10,000 BTC increased their holdings during the dip, while those owning less than 1 BTC were the primary sellers. In parallel, the Nikkei 225, Japan's benchmark stock index, experienced its biggest fall in over 3 decades, closing down by 12.04% on August 5th at 31,458.42, marking the largest single-day rout since the 1987 Black Monday sell-offs. Additionally, Wall Street's Fear Index, the VI6, saw the biggest one-day rise in history, signaling heightened anxiety among investors. These events combined to create one of the biggest crashes in Bitcoin's history. Despite the chaotic market conditions, there have been positive developments that could impact the market positively. For example, BlackRock, Fidelity, Grayscale, and MicroStrategy have maintained their Bitcoin holdings, showing confidence despite the market crash. This demonstrates that key players in the market are holding strong and even buying more, while prices are low. Amidst the backdrop of widespread selling in Asian markets, Australian investors displayed a robust appetite for Bitcoin, capitalizing on the recent dips to increase their holdings. According to a tweet from HODL 15 Capital, Australians are bucking the trend by purchasing more Bitcoin through the monochrome Bitcoin ETF, which is Australia's pioneering ETF holding Bitcoin directly. The ETF has shown a significant increase in assets under management, reflecting keen investor interest in Bitcoin within the country, suggesting strong belief in the long-term potential of this cryptocurrency even in volatile times. Despite the turbulent backdrop, Ethereum ETFs saw a positive daily net inflow on Monday, totaling $48.7 million according to Soso Value data. That marks the second largest daily inflow since the funnels were greenlit on July 23rd. Ethereum bounced back from Monday's sell-off, rising more than 10% to $2,552 according to CoinGecko. Total spot Bitcoin ETF trading volume surpassed $2.1 billion on Wednesday, August 7th. In other positive news, Nasdaq and BlackRock are set to expand their offerings by proposing the listing and trading of options for the iShares Ethereum Trust, ticker ETHA. This move aims to provide investors with an additional and cost-effective method to gain exposure to spot Ether, while also offering a hedging tool for Ether-related investments. BlackRock's Ethereum ETF was among several approved in May and began trading last month, marking a significant milestone for crypto asset management. $1.3 trillion asset manager Morgan Stanley Advisors also began offering spot Bitcoin ETFs to clients on August 7th, 2024. This is a significant milestone for crypto, as Morgan Stanley is the largest wealth manager in the United States, and its advisory network manages some $3.75 trillion in assets, including $1 trillion in self-directed client accounts. Winning over Morgan Stanley is a big win for the crypto industry, as it brings Bitcoin and other cryptocurrencies to a broader and more traditional investor base. In Japan, MetaPlanet, a publicly listed investment firm, secured a 1 billion yen, $6.8 million loan to purchase additional Bitcoin, just days after announcing plans to raise 10.08 billion yen through a stock rights offering, mostly for Bitcoin buys. This move underscores the growing interest in crypto assets, even amid a volatile market. Meanwhile, in Russia, President Vladimir Putin has officially signed a law that legalizes cryptocurrency mining. The law introduces several key concepts, including digital currency mining, mining pools, and mining infrastructure operators. Mining activities are now recognized by Russia as part of turnover rather than the issuance of digital currency, which could significantly boost crypto adoption in the region. Shifting our focus to Ripple, we finally have a conclusion to the long-running SEC lawsuit. Ripple has been ordered to pay just over $125 million in civil penalties, but crucially, XRP has been deemed not a security. This verdict is a huge win not only for Ripple, but for the entire crypto industry. XRP's price jumped nearly 16% following the announcement, and the ruling has brought much-needed clarity and optimism to the market. This decision could set a precedent that encourages further innovation and adoption across the crypto space. In another big news for the XRP community, India and the UAE have agreed to use XRP as payment for oil purchases. This historic shift allows both countries to bypass the US dollar, signaling a broader strategy to promote trade in native currencies and cut down on dollar conversion costs. This innovative system is also integrated with the XRP Ledger System Crypto Trading Fund (CTF), offering customers cashback rewards in CTF tokens, potentially revolutionizing global commerce. New regulations in Turkey have triggered an increase in crypto license applications, with 47 firms applying for operating licenses under the new framework. Major exchanges like Bitfinex, Binance TR, and OKX TR are among the applicants, positioning Turkey as a welcoming destination for digital finance innovation. This regulatory clarity is expected to impact adoption and bring more retailers into the crypto industry, providing relief for exchanges in terms of compliance. Finally, despite the recent market crash, Solana showed remarkable resilience. The coin dipped around 23% from approximately $142 to $110, but recovered back to $152, showing strong support from the crypto community. Memes surrounding Solana gave a significant boost to its recovery, and SOL flipped BNB in market cap to become the fourth largest cryptocurrency in the world. One of the biggest pieces of news from the Solana community this week was the approval of the first Solana Spot ETF in Brazil, marking a significant milestone. Experts suggest that a US counterpart is inevitable after the Brazil approval, positioning Solana as a major player to watch in the coming months. This week has been a roller coaster, but through it all, the crypto market has shown incredible resilience. From institutional confidence in Bitcoin and Ethereum to major regulatory wins for Ripple and growing global adoption, the long-term outlook remains bullish. As always, in the world of crypto, staying informed and prepared is key. If you're in this for the long haul, remember, times of fear can often present the best opportunities. Thank you for watching ChainMind. Don't forget to like, subscribe, and hit the bell icon so you never miss out on the latest insights into the crypto world. Until next time, stay strong, stay informed, and keep your mind on the chain.